Meantime, getting some breaking economic data. Let's get to Rick Santelli. Hey, Rick.
Hey, Carl, indeed. You're watching yields move lower. I'll give you the culprit here. It's consumer confidence. For March, we're expecting a number around 94, 92.9, weakest since Jan of 21. Present situation, 134.5, weakest since Sep of 24. If you look at expectations, 65.2, weakest since July of 22. Now, here are some positives. We're not going down dramatically in rates because last month, February final on consumer confidence from the Conference Board got upgraded rather nicely. Now, let's quickly look at Richmond Fed manufacturing, -4, weakest since Dec of last year, so basically the weakest since, of the year. And if we look at the service side versus manufacturing, -14, that's the weakest since May of 23. And we had non-manufacturing Philly this morning turn the market at 436 in a 10-year because it was weak. Now, new home sales for the month of February, 676,000 seasonally adjusted annualized units. That's actually the best of the year. It comps to Dec of last year. And we all know rates dribbled a little lower in February. We know existing home sales were actually pretty strong, up 4.2%. So let's get more granular with new home sales. And for that, we'll head east to Diana Olick. Diana?
Well, Rick, you said it's the best of the year, so it's 2 months of the best. It's really a little bit below expectations. The street was looking for up 3%. You got up 1.8%. Sales up 5.1% year over year. But mortgage rates came down during February pretty sharply, starting at 7.05% on the 30-year fix, coming all the way down to 6.74%. And this count is based on signed contracts. So people out during the month watching those mortgage rates come down. So you might have expected a little better. Prices, though, down 1.5% to $414,500. That's the median price of a home sold in February. And supply came down from 9 months to 8.9 months supply. But I want to touch on consumer confidence, which Rick just talked about, because we did get KB Home earnings last night, and they were a big miss, and they lowered revenue outlook. But CEO Jeff Metzger pointed to economic uncertainty and cooling buyer confidence, saying demand at the start of this spring selling season was more muted than what we've seen historically, despite a heavy level of traffic in our communities. And this comes on the heel of Lennar's chairman last week. They beat expectations on the earnings, but their guidance was terrible, and that's what hit the stock. And Lennar's chairman, Stuart Miller, said even recently, where household income indicates an approvable mortgage qualification, he said elevated personal debt levels have often presented an additional impediment to already strained mortgage access. And he also talked about affordability. So it's a very difficult spring ahead. And these new home sales numbers today don't seem to be what they should be, given that drop in mortgage rates. So I would say it's a slight gain, but it's a weak gain. Sarah.
Hey, Diana, thank you very much with all that color from the home builders, by the way, and the KB Homes talking about weaker consumer confidence.